module of the Profile Trading Development Pathway, a systematic approach to help you build toward trading skill and consistency using the profile to help you learn how the auction works so that you can make better trading decisions and ultimately take more profits. If this is your first module with us, we'd encourage you to make sure that you go back and review the orientation materials and videos, just some expectations of how does the pathway work, how do the modules correspond to each other and inform each other, as each module has a standalone concept that can absolutely be used directly, but know that it's part of a whole. And so we're trying to give you a comprehensive picture piece by piece. In this module, we're looking at determining auction direction and quality through price acceptance. Now, as with all of our modules, we look at a specific challenge that traders face that this concept, or what we're going to be talking about in this module specifically, will speak to. And here's the challenge, is that you can see a move in the auction, and the question is you're unsure if it's too late to join it or whether you should take the counter position. Okay, so this happens to lots of traders. You can see a move. Why is it that we say you can see a move? Because a move is easy to identify. You know, when everybody can see a trend, one of the questions you have to ask is there much trend left? But a trend is easy to identify once it's in place. Well, fortunately, there's a principle of the auction that helps us, is that the auction will continue in directional price discovery, meaning it's going to continue to offer for buyers and sellers to participate so long as new prices are accepted. What do we mean by new prices? We mean by prices that are in new territory relative to the recent auction. Now, it's important that you understand that principle, because traders who fail to identify acceptance risk exiting too early or entering the counter trade too early. And both circumstances will add stress and damage to your account. One will just keep you from really growing the account. The other one's going to cause significant drawdown. The benefit and outcome of what we're going to talk about in this module is that you're going to be able to discern the quality of directional moves and the likelihood upon which they will continue or rest by leveraging this concept of price acceptance. Now, two questions that we think about when we're reviewing recent auction activity. And those are, which way is the auction attempting to go? And how good of a job is the auction doing in getting there? Okay, which way is it trying to go? How good of a job? Now, the which way is it trying to go is typically, easier to discern. Ways that we discern that: one, we know that all auctions, this goes back to module 1, all auctions are either distributing or developing. They're trending, consolidating, they're directional or sideways, right? And we can do things like we can isolate the rotations using things like smoothing, exponential moving averages, or VWAP. We can see, is there higher highs, are there higher lows? We can also look at value area and volume point of control placement. What do I mean by that? So when we look at a TPO chart like this, and we say, okay, which direction is this auction attempting to go? I can look and very quickly see that this auction in this most recent is trying to attempt higher from the recent auction. Okay, so it's attempting higher from the recent auction. In this section, it's moving lower. Each of the points of control each day, value areas are lower. I'm seeing that the auction is going lower. This one may be a little bit more difficult because it seems like we're going higher and lower, but overall we're going higher because even the pullbacks are higher than prior pullbacks on a daily basis. So it's somewhat simple to understand which direction is an auction attempting to go depending on the time frame you're looking at. Again, this is day by day market profile charts. But the second question of how good of a job is it doing is where it's really important. So once we determine a direction of the auction, it's important to consider the quality of that directional auction. So strong directional auctions should continue, and weak directional auctions are vulnerable to reversal. So we're going to spend some time trying to figure out, how do we know it's a strong auction versus a weaker auction? Well, a couple of different ways. One is the counter activity weak? Does it bring in more directional participants? Meaning, if I see a directional auction and I get counter activity, is that at a different tempo? Is that at a different volume than this? And then does that just bring in more directional participants? When we're in the day time frame, are we keeping with our IB extension stats? So, are we able to extend the initial balance? Are we able to get to percentage degrees of extension? What's the order flow picture look like? When we talk about this in module 8, but looking at cumulative delta or period delta to help us understand, or even period volume to understand what's the order flow picture look like. Is it picking up in the direction that is directional, or is it weaker? And where are the machines? We typically look at the machines using things like exponential moving averages or volume weighted average prices. Where are we relative to value? We'll talk about this in module 4. Can help us discern how good of a job the auction is doing. Is the structure, the actual structure within the TPO chart, is it good or bad? But for the purposes of what we're talking about in this module, are we able to facilitate and accept trade in that direction, or are we building excess? And is there any rejection of directional prices? So that's where we're really going to focus. Well, all of these other things help, and we talk about these in other modules, but in this one, we're really looking at this idea of acceptance and rejection. Now, we're using concepts from physics really to kind of help with this. And the idea is that an object that stays at rest and an object in motion stays in motion with the same speed and in the same direction unless acted upon by an unbalanced force. So, and in principle, we expect an incomplete auction to complete and reach equilibrium. Okay, in principle, we expect an incomplete auction to complete and reach equilibrium. And so the auction will move until counter activity shuts off the directional auction and begins rotations around a price that becomes value. Now we can see this in a day time frame chart. As we've talked about before, the market profile graphic helps us see where we get unfair highs and unfair lows, and we can see rotations where the auction is being accepted. So it's really no different than looking at a bell curve in a statistical distribution. This is just a bell curve, and here's unfair highs and here's unfair lows. So the auction is not accepting here, it's not accepting here, but it's accepting here. And so when we see a profile like that, we know that that's a complete auction. It has now gone through the auction process of going high enough to find people who aren't willing to move higher and low enough to find people who aren't willing to move lower, and we're back kind of in the middle. We're ready for the next move. And this happens on one day, but it can also happen across multiple time frames. And two key ideas that we can use to arrange this information and help us answer that question of directional quality are acceptance and rejection. And another way to think of it is that there are two types of prices in any auction. There are either accepted prices or rejected prices. So two questions for you to always being asked when you're looking at an auction in front of you are, hey, are the directional prices being accepted? Or are the directional prices being rejected? This is key objective information that can help you recognize where you are within the auction and ultimately mitigate risk. And again, as we talk about over and over again, it's really about mitigating risk that helps us be in the game for the true opportunity. So let's look at acceptance first so that we kind of get an understanding of what that means. So directional auctions that are being accepted are incomplete and likely to continue. Okay, what does that mean? Well, so it's seen through this idea of acceptance is it's seen through additional volume at price in the desired direction, particularly in imbalanced profiles. What does that mean is if I take a stop at any point and I look at the profile during the day, if I've got a skew to the profile where most of the information is to one side, that's an imbalanced profile. Because remember, at equilibrium would get me here. So if I've got half of that, that's an incomplete auction. I haven't been able to auction high enough to get to excess. And so that tells me that I'm likely to yet continue. And then other ways that we see acceptance are through additional period volume in the desired direction, seen in holding price away from prior value. It's seen by holding the auction outside of the initial balance range. It's seen in further TPOs or volume at price printed in the direction attempted, even something we call one-time framing. and it's seen in migration of the developing volume point of control as value follows price. Acceptance is seen in overlapping value and subsequent periods of trade in the attempted direction, and it's often confirmed by order flow. Okay, that's a whole lot of information. Let's actually look at some examples here. So here's an example. This is exploding out the profile, and I've got 5-minute session periods and mini profiles inside of the larger profile. And one of the things that I'm going to look about here is, which direction is this auction attempting to go? It's attempting to go higher. Well, how good of a job is it doing it? Well, here was the point of control early in the session. Now it's here. Now it's here. And then at the end of the session, it's all the way up here. So that migration of the point of control is a form of acceptance. And seeing build out of concentrations of volume in the profile, so being able to continue to build volume in the direction of the attempted auction is acceptance. As well as if the IB high is here, the fact that this auction could hold outside of that IB high and do that for most of the session is another form of accepting that directional auction. So we can see that acceptance. Here's another way that we can see acceptance is that from the prior day auction, where the point of control is here, the next day the point of control is here. So it's able to accept price away from the prior day's value. Here's another example of as the auction moves, you can see there's these little micro periods here of acceptance taking place, and you can see that built out in the volume profile. And then ultimately the point of control down here, further affirming that directional control. Here's a form of acceptance. We talk about this idea of one time framing, which we'll talk about occasionally as a way to know we're getting good directional excursion. But here's the prior day's point of control. Actually, we have several days of balance here and overlap. And then here I have a directional auction. And every 30-minute period, I'm making a lower low and a lower high. So every time frame, I'm making a lower low and a lower high. That's a very good directional auction that is accepting price away from prior value. And here is in multiple time frames. So here's an example where here the auction starts directionally, and every day the point of control and the value area is one time framing higher. So you can have one time framing intraday, and you can have one time framing multi-session. And what's fascinating is it works the same way. So depending on what time frame you're active in, that can give you insight. Here's an example of just exploding out the TPOs throughout the day. And one of the things that we note of a directional auction that's accepting value is here is the point of control early, and then here, and then here, and then here, here, and here. So throughout the day, they're accepting the point value further away in that directional vein. Okay, so that's a high level look at acceptance. Now let's look at the rejection, and then we're going to bring them both together and look at some further examples. So a directional auction that are being rejected are complete and likely to lead into balance. So if you remember our 4 behaviors. So accepted auction is one that's in the move phase. Whenever I get rejection, I'm now moving into that rest phase. So this is when the directional move is shut off, creating tails and excess in the profile. So this is where once I've had that initial profile that's somewhat formed out, this is when that is now complete, and I've got those unfair highs and unfair lows. So this is when price attempts away from prior accepted prices and cannot find additional participants. And so when the auction also opens outside of a prior range and returns to that prior range, that auction is rejecting new ranges. When we see order flow reverse, we're rejecting new prices. When we see a taper in volume at price, meaning as we're moving directionally, we're getting fewer and fewer participants, that's rejection. And it's observed in single prints or tails formed on profile extremes. It's seen in engulfing behavior. Engulfing behavior is where we, in one period, completely reverse That's a way that we're behaviorally rejecting a directional auction. It's seen when price opens below a spike. So meaning that there is some type of strong directional trade that we can kind of mark almost like if there's a nope, here we go. It's almost if we see a strong directional period and then we trade back through that period that has rejected this new activity. We see this in neutral IB activity. This is where we take out IB high and then come back and take out the IB low. So here's an example in the day time frame of some engulfing. So this auction was moving lower, and then this period and this day here engulfs the prior session, reversing the trade and rejecting new lower prices. So there's the rejection. Here's another way that we see rejection is that we see an auction that has several sessions of overlap and attempts into new territory and then comes back and closes back inside. So once the auction got away and then came back inside that prior range of prices, it then returns because the auction has rejected this new territory, right? That's a form of rejection. And then see, if you look a couple sessions after that, how difficult it is for the auction to go back in that direction because we've learned we've rejected those prices. So here's a situation where an auction opens. So here's the open, here's prior value. We open, attempt higher, actually take out the IB high, come back through the IB low, so that's neutral activity, and we get back inside the prior day's range. So we've rejected new ranges and we're returning back to prior acceptance. And this is one of the things that happens with rejection is that when we reject new prices, we go back to prices where we were able to accept the auction prior. Rejection. Now, this is an interesting example because this form of rejection actually shows us a couple different things. One, when we are here, we have prior value, and then notice early on we reject these ranges, push higher, but then we come back through the IB. So now we're rejecting those prices. Now we're coming back to those prior accepted prices. Here looking at a 30-minute, these are 30-minute periods. Again, the auction opens right here, attempts lower, gets into new territory, is accepting new prices, actually has the point of control up here, trades all the way back through the open. This is now all rejection. So where at first it was acceptance in the fact that the point of control was higher and migrated higher, it then comes back to be rejected. Here's what we mean by some of this bit of taper in the profile as telling you that rejection could be on deck, is that you're running out of participants as the auction's attempting higher, so then it rotates back to a prior area of acceptance. Here we have buyers in this period who are moving away from an area of volume, established volume up here, and then now we have buyers rejecting here and looking to accept lower. Lots of different ways that we can look at this, but it is the same behavior. Here's an example where I have multiple days of acceptance, and we can see acceptance through overlap of sessions. Now we're rejecting that. We're trying to get into new territory, see if we can accept new prices somewhere else, and we reject those. See how this profile here has an imbalance here that says it's incomplete and likely to return back to a prior accepted price. Here we're looking at both acceptance and rejection happening at the same time. What do we find? We find lots of acceptance around this price, but when we get up here, we're finding rejection, and when we get down here, we're finding rejection. Very good examples of unfair lows, unfair highs. So it's, you know, had multiple days of equilibrium taking place where this auction just is unable to accept new prices. So it keeps coming back to prior accepted prices. Okay, let's look at some further acceptance and rejection examples. So this is looking on a 5-minute basis. And I mean, this is further just to illustrate how you can see this at much smaller time frames. So, you know, here's a push higher. Here we come up here, we're rejecting those prices. We get too low, we reject those prices. Here's an area of acceptance. Come down here, we're building out a further area of acceptance. Then we push lower, we reject that. We come back to this prior area of acceptance, then we reject out of that. Anytime you see lots of overlap, that's acceptance. When you see spikes like that come back, that's a form of rejection. And then on the composite profile, we can see that these prices are rejected and these prices are rejected, and overall, those prices are rejected or accepted. So it's very important as you're looking at the auction to note, you know, which prices fit the time frame that I'm active. You know, and when you're doing your analysis, to be able to find areas of multiple sessions that have acceptance and then sessions that are rejecting those ranges. When we look at it across multiple sessions, and this is just looking at volume profile, but here's an area of acceptance. The auction attempts away from that, rejects, comes back into this, and then explores in the other direction. And that's one of the things to look for whenever you see rejected prices, is that if you attempt, you know, you don't know it's rejected until you've tried away from a prior area of acceptance and returned back to it. Then you know it's rejected. The interesting thing that happens then is that the auction often tries to go in the other direction. So because it went higher and it couldn't facilitate trade, so now it goes lower to try to facilitate trade and see if those participants will step in. And I will agree, it is challenging because an auction can be rejecting in one time frame and accepting in another at the same time. So, you know, always default to a higher time frame, you know, so because you may be having acceptance take place in an intraday basis, but on a multi-time frame basis, you're very much in balance. Now, let's look at this applied to the IB trades, the extension fade or the IB go with, because you know, again, the question is, should I go with it or should I fade it? Well, at a very high level, the question is, now directional auctions that are accepted are the ones to go with, and auctions that fail to be accepted are the ones to fade. So if I see rejection, I want to fade that. If I see acceptance, I want to go with that. So if my IB go with entry is established at IB high or low, so I'm at the extreme of the IB, for that trade to be successful, to go on to 1.5 and 2x the IB extension, I need further price acceptance in the direction of the IB breakout. If the IB go with entry is established favorably relative to developing value, meaning if I'm back inside the IB range and I'm looking to buy below value or sell above value and rotate back towards the point of control for rotations, then I don't want acceptance near my entry price because I'm buying at that unfair high or unfair low, or selling at that unfair high or unfair low, and I want to return to accepted prices. Whereby if I'm doing an extension fade, that's in play when there's evidence that we are no longer accepting prices outside the IB range. So we are expecting a return to prices accepted earlier in the session, which is the developing volume point of control. Okay, well, let's put this all together and look at a sequence of sessions, both multi-session and intraday, to get an idea of how to think about this as the session goes by. So we're going to start here with just an overarching view of an auction about to open. And I just want to make some light editorial comments to give us some context of where we are and what's taking place. So first of all, posture, because we always kind of start with posture. So the most traded price the last week is up here around 35.15. The most traded price for the month is below at 33.40. So we're in between. We're kind of what we call ping pong posture. We had a couple days of balance or acceptance, and we've now rejected off of that prior value, and we accepted outside of that prior range in terms of where we closed. This is right before the open, and we have a gap. So right now we're going to see, can we accept further excursion away from this area of value and away from the value of the prior day, or will that pull us like a magnet? Now, the other thing that we do whenever we're getting our plan is we look at specific areas of interest and decision areas. So here I've highlighted a couple of those that would be areas of interest for the day. One is this 34.80 area. That's that prior point of control. Here is a naked point of control around 34.60. And then I've got another one down here right near where the overnight low is at 34.33. I've got another one down here at 34.10. It's a pretty wide gap, but it's almost exhausted what I would expect for the range of the session. So we'll see if we can further accept that. VWAP is here, so we're trading below VWAP, and we've also spent and built some volume at the bottom end of this profile. So this looks and appears as if it's incomplete to the downside and would need to go lower still to exhaust the auction and to come into equilibrium. And that would mean most likely that would mean most likely that we would come to this price or could get all the way down here to 34.10. Okay, so we're just going to kind of progress through the session and look through this. So a couple things to note right off the open is that I've got very strong negative delta. So this number here, that's negative 14,000 deltas to the sell side. And so I'm going to watch on the RTH how that plays out. Okay, so now we're through a period. We're half an hour into the session, and what are we finding? Well, we're finding that the auction is actually rejecting these lower prices early on, because while, if you recall, that early delta was really big, now we've gone 8,000 deltas to the buy side. So it appears that we are rejecting these lower prices and heading back in the direction of prior value. Now the question will be, can we continue to accept prices in this direction, or will we roll down and further accept this most traded price overnight? So right now the most traded price is right here at 34.40. We're trading above that. So if we're going to accept these prices, we would see the point of control migrate higher. All right, so let's go forward in time. So now we're here into B period at the beginning of C period, and let's note what's happened is that as the period has gone, so we've had some sellers come back in, but we did migrate value higher. So we have accepted higher prices in the day time frame. We're still overall accepting lower prices, but note here a couple things. One is that we have some taper lower. We also have some single print. So this is a form of excess in the auction, and we're spending more time balancing and accepting up here in the higher part of the auction. The more time we spend up here, the more that's going to increase the probability that we head back in this direction toward at least this 34.60 area or the 34.80 above. All right, let's fast forward. Okay, so now we're another 30 minutes in, and at this point, we're continuing to accept lower prices. In fact, we've re-migrated the point of control lower. So we're at this point, we're accepting these lower prices. And if we're looking for our IB go with trade, because we're right here in the middle, we're inside the IB, we don't have extension yet. So if I take out IB low, I could look for 34.10. If I take out IB high, I've got a price to look for up here, and then 34.80 higher. But I'm still waiting to see how that goes. All right, another 30 minutes, and now I've got, actually not quite to 30 minutes, and I've got IB high extension. From the most traded price, from the most accepted price, and we know that moves begin from balance. We actually covered that in a module. We talk about, getting ready for a move, and moves come from an area of balance. So here's an area of balance or consolidation or development, as we talk about. And there's a big move, a big buying move that starts right from that. That's actually held for 5 minutes. That's a form of acceptance. And then we get more directional move that takes out the IB high. That's also a form of acceptance. So we have a couple things. We've got tempo, we've got order flow in that direction, and we're going to new territory. Again, the question is, can we accept further these prices? What other things would be? Well, can we move the VPOC higher? Well, guess what? We remigrated the point of control back up to the higher part of the profile. So that looks good for an opportunity to go with. So this is the strength where the move starts. We've got IB high, so we're going to see how does this 5 minute hold. That could be a clue to help us get up towards 1.5 and maybe 2x. 2x actually gets us to that point of control. So that there's an opportunity there for the go with trade. And it looks the fact that we've got IB high, it looks like we're rejecting the gap. And if we're rejecting the gap, we're going back to a prior area of acceptance. That area of acceptance is back up there at 34.83, the prior day's value. All right. So let's zoom in a little bit and take a look at the picture. One, we've got good volume. And what's interesting is that we have, above average volume so far, rejecting new prices. So we've got strong order flow, really strong order flow from here that got us to the IB break. So, really don't want to see trade below 34.50. And we want value to hold up here. All right, another 5 minutes. A new period. And lo and behold, it looks like we have a little bit of rejection taking place here. And how we know this might be some rejection is we got up here, we've got some excess here in D period, right at halfway back in the session. And this buying has now been negated. Okay, so this could be something that could lead us back for rotations, but notice there's no divergence between price and value. So this isn't something that we would look to fade. Okay, so this just really means we're just kind of waiting for more information. All right, now we've got a little bit more time and we have a new spike here back outside the IB, very, very strong. If this holds, this could be an opportunity to go with, again, up towards these targets. And if we trade back through this 34.54, that could lead to some rejection. Well, let's fast forward and notice that we got no follow through, and in 15 minutes later, we're back through the sign of this and back to that point of control. So again, no dice. Okay, and this gets us into lunch land. So now we're, in the period we're not really looking to do anything. So let's fast forward an hour. You can see all the way back here was that rejection, and notice how we trailed lower through that lunch period, and now we're back after lunch, and we're back again one more time back to that IB high, and we're looking to see in a similar form. Here's a push on order flow, seeing if they can get outside of this and go with. This would be the strength to defend. Let's see if it brings in more buyers and an opportunity to go higher. Okay, and we find very strong buyers up here. Now, we would need to defend. We don't want the trade to go back below this 58, or that could be a form of rejection. But note that in the profile, I don't have any excess up here. I have what we call a double top here. So still looking for higher prices to shut off the auction. Okay, we pulled back, but note, and we talk about this in module 8, but notice here is that really strong push, and we pull back but can't take out that low, have weak selling order flow. Here's some more buying stepping back in, and then they're pushing again into new territory, getting closer and closer to that 1.5. It would not be until we got up here that I would even think about the fade. This is kind of the box where I've got good price to value divergence to look for some rejection. Okay, now notice another 30 minutes later, and what's happening? All I'm doing is accepting these higher prices. So this auction is still unlikely finished to the upside. little more time. Now I'm pulling off here. Now this could be interesting. I've got actually some decent selling order flow. This could be the beginning of some rejection. Now I still have a poor high up here that is not a great idea, or is of some concern, but I do have price to value divergence. So if this holds and I can find some follow through on that, that could push me in the direction back toward that point of control. Okay, so in this period, if I got a lower, I've got a little bit of single prints in here, so I've got a little bit of poor structure right there, that could be just coming down to clean up. This could be an opportunity to reject below this decision level and start looking for the auction to go this way. Let's see if we get some follow through here. Okay, we do get some follow through. It's looking good. Want to see some more acceptance on a smaller time frame in this direction. Would not want to see the trade back above like 67.50, because that would say we're still accepting higher prices. Okay, next 5 minute is of concern. There's good buying order flow. That's 400. So you had 700, 600 to the sell side. Now we've got about 600 to the buy side. That's canceling out those sellers, and that just brought in more buyers. Okay, now we're back to having some potential excess up here, but we've had really strong buyers here. So this is now areas that we'd have to trade back through to get an opportunity to trade for rejection. And we're getting very, very close up here. So this is, again, one of the situations where overall, what's happened so far in this session? We've rejected new prices. We're heading back toward old prices. But in the day time frame, in the current session, we're looking to see, can we continue to accept away from the developing value? Or will we reject and come back to the value for the day? So is it going to be yesterday's value, or is it going to be today's value? Flash forward another 35-minute period, and we've now got within the prior day's value. That's certainly placed. There is some single prints here in L period that could be susceptible to some cleanup. In fact, boom, there's a little bit of cleanup there. But we just continue to accept into the close. And then at the end of the day, we have, there's an area of volume here that we accept, that also we clean that to the tick, that prior value. And so as I look at the end of this day, I go, what was the story? I attempted to accept new prices, but the auction rejected. And we're looking at, this is the full 30-minute breakout. And you can see how, although we stopped a couple times, most of the day we were one time framing higher highs and higher lows throughout the session. Now, we accepted and closed away from value. So one of the key questions we'll have for the next session is, what do we do with this value down here? Are we going to be able to accept away from that value, or will we come back to it? So then if we fast forward to the next session, so this is the opening of the next day, we're actually trading further above where that value was that prior session. And so the question will be, hey, can we continue, which value is going to be most important? Are we rejecting these lower prices of the last couple sessions, and will we go back to the accepted prices up here? Or will we reject those prices and head back toward prices like this most traded price, and then down in this direction? Now, if I fast forward to later in the day, we find that while we attempted higher, we ultimately rejected, and notice how all the volume is at the bottom end of the profile, suggesting that we're still going to come down to this prior area. And that actually completes that session. And so then when you look at the next session, I've still got value down here and I've got value here. I rejected an attempt to get back to this prior value. So if I've rejected an attempt to this value, it would say, if I can stay south of this value, I should go here. If I can stay above that, then I can challenge this rejection and go this way. And then when I look at what the next day did, it rejects this value and heads to that value. Further accepting, and then look as the session went, it accepted value here, accepts value here, building out the volume, looks incomplete. There's no excess here like there is up here. So I hope that kind of helps walking through from the build up through a session and then cascading sessions after that as we look at this idea of acceptance and rejection. And just practice with it. Pick a time frame that's going to be the one that you're going to be in most often to kind of see that. Maybe even just look at a one-day profile and say, okay, here's prices that we rejected, here's prices we rejected, here's prices that we've accepted, as a way to do that. But as a test, a couple things. One, there are two kinds of prices. What are they? They're accepted and rejected. And then in principle, we expect an incomplete auction to do what? Continue until it completes. Accepted directional auctions are likely to do what? Continue until they are rejected. And then rejected directional auctions are likely to do what? Trade back towards the direction of a prior accepted price. And then an auction that is accumulating volume at price near an extreme in the profile is most likely to do what next? Continue until it exhausts that inventory and finds excess rejection to then bring the auction to equilibrium. So key takeaway is that if you can observe acceptance and rejection, you're going to spend more time in the auction flow and knowing when that flow changes. And the best way to be on the right side of P&L in your trade, and you'll actually find that if you're putting on a trade where you're in the flow of the auction, using things like acceptance and rejection, that you're going to find more time that of the trade where you're actually in profit than in a drawdown, because you're in the flow of the auction. And acceptance is a way to help that. Okay, some homework. One, pick a time frame that you make decisions in. Ask those two key questions of a directional auction. Which way are we attempting to go? How good of a job are we doing at it? And if the auction is accepted, where is it likely to go next? And if it's rejected, where might it return? This is going to help prime the brain to think about the auction flow. And really, the more that we get adept to reading the auction flow, then when we layer our setups in there, like an IB go with or extension fade, it makes a lot of sense as to where we can fit that in. Share those either in a Pathway channel, send a direct message to our team, or send us via email. We'd love to see what made sense, what didn't, where you have additional questions around this idea of acceptance and rejection. But with that, we put a close to Module 3, determining auction direction and quality through price acceptance. All right, trade well, everybody. Peace.